well. All right. So, hey, everyone. Welcome to Canadian Mortgage Weekly Live today with Joe Bladek. We're talking about the Bank of Canada interest rate announcement this morning. Lots to talk about because it's a big interest rate announcement in Canada this morning. There is anticipation of a double rate cut today. And when we're talking about a double rate cut, typically what we see in Canada when interest rates get reduced is a 25 basis point reduction, which ends up working out to approximately 0.25%. And today there's anticipation of something bigger. So, what I'll do right now is as we're getting ready for the Bank of Canada to announce their interest rate here, we're going to get into that. We're going to take a look here. We're going to find out any moment now what the Bank of Canada interest rate is. And we'll just talk about that here today. All right. So before we get into this here, there's a lot of talk about the interest rate going down by quite a lot today because of a few factors. Inflation actually has gone down below 2%. And with inflation under 2%, that really indicates that the Bank of Canada has met its target to combat inflation. I actually saw an article out by the IMF this week saying that inflation on a global scale has essentially the battle of inflation has been won on a global scale. And that is actually pretty huge news for the global economy. All right. So, as mentioned, the rate announcement was just about to come out here today. And we have it at 9:45 a.m. We saw the rate announcement come out, a 50 basis point rate reduction today in Canada. That is essentially that jumbo rate cut we were talking about. And why is it a jumbo rate cut today? As I mentioned, a rate cut typically indicates a 25 basis point reduction, which works out to 0.25%. But today we're actually seeing a 50 basis point reduction, which is 0.5%, a half a point rate reduction on the Bank of Canada interest rate policy this morning. This is fantastic news. So what I'll do is I'll talk about how this rate cut today is going to affect anyone in Canada looking to borrow money for a home, or anyone in Canada that is currently in a variable rate mortgage. It's absolutely crazy to see this double or jumbo rate cut this morning. Let's get into some of the comments that the Bank of Canada has made about this jumbo rate cut this morning. Essentially, they're saying that it brings the overnight rate in Canada down from 4.25% to 3.75%. That's a big reduction. Okay. And so it shows here that the bank continues to expect the global economy to expand at a rate of about 3% over the next 2 years. I mean, that's pretty strong numbers there, 3%. We're actually seeing a lot of restaurants be very slow right now. Things are slow in Canada right now. I'm seeing a lot of that. Oil also is mentioned here in the comments from the Bank of Canada, saying that global oil prices are about $10 lower than assumed in the July monetary policy report. So it looks like as well, on top of this global growth, we're seeing that the Bank of Canada is concerned about the global oil prices being $10 lower now than they were in July, as per their forecast. So oil prices are lower than forecasted. And I guess oil is a big part of Canadian economy, being down in Alberta. We have a lot of jobs there. I have a lot of clients there, actually, that say they live in Ontario. They commute by flying out to Alberta for a couple weeks, and they fly back, and then they buy a house in Ontario, but they're working in Alberta. A lot of people do that. So when oil prices go down, we see those jobs start to vanish because there's not enough profit in the oil industry to keep that going. So with oil prices further down, I could see more merit to this 50 basis point rate cut this morning happening because Canada is concerned about oil prices. So with the oil prices lower, the lower interest rate will aid in stimulating the economy when there's not the same amount of stimulation coming from the income from oil sands, the oil fields in Alberta. Okay. Also mentioned in this Bank of Canada report here about the interest rate. If you're just joining me today, the Bank of Canada has lowered its interest rate. They've actually lowered it by a double rate cut. So not only a 25 basis point reduction, there has been a 50 basis point reduction this morning, everyone, on the Bank of Canada's rate announcement this morning. All right. And then it looks like there's mentions of inflation. And as I mentioned at the beginning of my podcast this morning on Canadian Mortgage Weekly, inflation has gone down and it's gone down under 2%. I'll give you the exact figure here, but it's actually quite a lot lower than 2%. The Bank of Canada originally had raised interest rates in order to get inflation back down to 2%. And for a long time, there was a lot of economists saying that the Canadian government and the Bank of Canada specifically overshot this target. Now we're seeing inflation at 1.6%. There's no forecast yet for the next inflation announcement. However, a 1.6 inflation announcement, and now we're seeing also interest rate costs go lower. We're also seeing oil prices potentially going lower. We could possibly see inflation go lower even still. And if that continues with oil prices going down and inflation going down, we'll have to see what happens with the final interest rate announcement in Canada this year in December. But if you're just joining me right now, if you're not aware, the Bank of Canada has decreased rates by 50 basis points. If you're just joining me here on my channel as well, my name is Joe Bladdock. I'm a mortgage broker working across Ontario with folks wanting to refinance or buy their first or second or third home in Ontario. I do mortgages with all the big banks as well as all the different alternative lenders. If you're looking at getting a mortgage with TD Bank or Scotiabank, with the best rates, terms, and conditions, we can actually look at your specific file if you're looking at getting a fixed or a variable rate mortgage, and we can look at what's best for you. But if you're just joining me here today, variable rate mortgages have gone down, and that's what I'm going to get into next. Variable rate mortgages are one of the products that is actually going to be affected by this change today. And what we're going to see here is actually that the variable rate mortgages have gone down in interest rate. So prime rate up to today was 6.45%. What do you think prime rate today in Canada is? Well, as of today, with prime rate coming down 50 basis points, we're going to see a prime rate of 5.95%, which is going to be a fantastic change because with the prime rate coming down to that level, we'll see variable rate mortgages come down as well. And in turn, anyone who's in a variable rate mortgage right now, specifically a variable rate mortgage where the payments change every time there's a Bank of Canada interest rate policy announcement, well, in that case, your payment will actually go down. You will receive a notification from your lender. You'll receive it probably in the mail within the next 1 to 2 months. And you'll see that there will be an interest rate adjustment on your mortgage that will be 50 basis points lower, so 0.50% lower. And as a result, you'll see actually that your payments have gone down as well if you are in a variable rate mortgage. And if this is a variable rate mortgage where the payments do change for you, you'll also notice that the amount going to principal is staying the same, that the amount less is simply just interest. So you're saving on interest by this announcement today. We're seeing a lot of people go into variable rate mortgages because the Bank of Canada is starting to lower interest rates again. There was a call I was on with one of the biggest lenders in Canada just a couple weeks ago, and the vice president was on this call, and they were talking about how variable rate mortgages for the last few years have been few and far between, with people wanting to lock in and not worry about interest rate nightmares, them waking up with an interest rate that has gone up to nominal proportions. But now they're actually seeing variable rate mortgages take a bigger market share, looking at actually 1/3 of the total mortgages being taken right now at this lender in Canada, one of the biggest lenders in Canada for mortgages. So that gave me a lot of insight into what Canadians are thinking. Even my clients are thinking variable. If you are, well, more than usual, there's still a lot that are thinking fixed, and for good reason. But if you're just joining me right now, the Bank of Canada has announced that there is a rate cut today, and there's a double rate cut, a 50 basis point rate cut, 0.50% reduction in the prime rate in Canada. The prime rate in Canada has gone from 6.45% down to 5.95%. And we're just talking about how more of my clients in Canada are taking variable rate mortgages with banks like TD and Scotiabank. So if your mortgage has a payment that changes, you'll receive that payment notification change, just hopping back to that train of thought, and you'll have your interest rate and payment reduced. Now, if you're in a fixed payment variable rate mortgage, I know that sounds a little bit oxymoronish, but if you're looking at a fixed payment, which means the payment does not change with interest rate adjustments, then the amount of time, so the amortization of your mortgage, will actually be shortened by this change that happened today. And if you're just joining me today, the rates have gone down today by 0.5%. Huge news in Canada, and huge news just for borrowers in Canada. If you're watching this episode right now and wondering, okay, so I'm in a fixed rate mortgage, or I'm getting a fixed rate mortgage, does this mean that those rates will go down? Well, fixed rates actually, they change based on what the market thinks variable rates will be. So for the last few weeks, the market has been thinking that the rates would go down today. So as a result, fixed rates have, in anticipation, come down a bit already because of this rate change. We may see some further rate adjustments next week, as well as lenders start to compete in this lower rate environment. If you're about to close on a mortgage, either a refinance or a purchase, it's a good time to reach out to either your lender or myself for a second opinion. You can reach out to your lender and ask them to reduce the interest rate further. And if they can't, then you can look for a second opinion. And I'm always happy to do that. Quite often, a lot of the times, I've been able to beat the initial estimate by providing a second opinion. And if not, then no worries. It's no cost to ask. You can actually book a call with me in the link in the video description below. And you can book a call back, and it's really easy. At your convenience, I will call you back and we can discuss your mortgage on your timeline, whether it's in the morning, afternoon, or evening, any day of the week. We can talk about your mortgage. But if you're just joining me here today, I'm a mortgage broker in Ontario, Canada, and we just saw the Bank of Canada reduce rates by 0.50%. Huge news for anyone in a variable rate mortgage today. Anyone in a variable rate mortgage has had their payments or amortization, depending on what kind of variable rate mortgage you're in, go down. In addition to that, what else is changing because the rates have gone down today by 0.50%? That's 0.5%, guys. The rates have gone down by 0.5% today. Absolutely huge news in Canada. Adding up all the rate cuts this year, guys, we have 50 basis points today. We have 0.25% in September, and we had another 0.25% in July. So altogether now we've had the rates come down by 1%, so 100 basis points. So that's great. As I mentioned, if you're in a fixed rate or if you're getting a fixed rate mortgage right now, the market has already anticipated these rate cuts. So the fixed rates have actually already been adjusted to what the market has been thinking already. We might see fixed rates adjust a little further next week. And keep an eye on inflation next month. You will want to see if inflation goes down even further, lower than 1.6%. And if inflation does go lower than 1.6% next month, we will see a lot of consideration given towards another rate cut in December. Let's take a look at some of the other metrics that we look at here on Canadian Mortgage Weekly to see what could happen in the next rate cut. It's actually been reduced by 1% already this year. We had a 25 basis point reduction in July, a 25 basis point reduction in September, and a 50 basis point reduction in October. We are anticipating possibly another 25 basis point reduction in December to take us to that 1.25, but we're going to get into that right now. All right. So if we're looking at the metrics that we use for whether or not rates go down or not, oh yes, you're right. We did have a reduction of 25 basis points in June. I forgot about that one. The summer went by so quick, I swear. All right, so some of the metrics looking at in these rate cuts, I look at inflation, and inflation has been heading down. We're at 1.6% today. We may see inflation go down and cool off further next month. Inflation is largely it's largely going down now because of gas prices. If you've seen gas prices at the pump, gas prices have gone down by quite a large amount, and that has contributed to the lower inflation. And if oil continues to go down further, we'll see gas prices continue to fall, inflation continue to fall, and as a result, we may see further rate cuts. If you remember, we did have a huge rate decrease by the Bank of Canada in 2020 when we saw oil prices crash. And that was huge for the economy because when interest rates went down, it spurred the real estate market like crazy. And if oil goes to $55 a barrel, as one of my TikTok guests have indicated here, that will be crazy for inflation. It will push inflation down to probably under 1.5% in Canada. And we would see interest rate cuts even further in Canada. And that's speculation, but I would speculate that to be the case, that if we saw oil hit $55 a barrel, we would see interest rate cuts quite high. But if you're just joining me today, we have seen an interest rate cut by the Bank of Canada of 50 basis points. That's 0.50%. That is a huge number. We've seen the Bank of Canada make comments about how this is due to the fact with global growth being around 3%, that inflation is at 1.6%, and that the oil price is $10 lower than they had projected for this time of the year back in the summer. And as I mentioned, there have already been 3 25 basis point rate reductions in Canada and a 50 basis point reduction today. So that actually brings us down by 1.25%. Prime rate now sitting at 5.95%. First time that prime has been under 6% in quite some time. If you all don't remember, we just had prime rates sitting at 7.2% just last year, this time, 7.2%. And we're seeing houses and the market start to really get started right now. It's almost like we're seeing a spring market in the fall. And I think that it might continue so long as these rates continue to go down. Yes, there's a couple comments here coming in that rates go down as fast as they go up. And historically, that's been correct. If we take a look at a lot of the charts, we've seen even in the 2008, 2009 financial crisis, we saw rates go up quite quickly and then go down just as quickly as they went up. All right. Yes, 2025 will be fun. I am anticipating that the mortgage business will probably be quite a lot more busier next year in the spring with rates coming down. I'm seeing a lot of my clients actually come to me. They want to get prepared. They are telling me that they're seeing more deals on the market in terms of houses. So people are getting more interested in what's out there. They're actually able to afford a little bit as well with these interest rate cuts. Before, when prime rate was around 7.2% this time last year, it was really hard to afford anything. Yes, our GDP does depend on it quite a bit. I would agree with you there. But we were just taking a look at inflation. I want to take a look at another metric here, and that is the 5-year bond yield. And I'm going to go into this metric here right now because a lot of the times we see a reaction of the 5-year bond yield as soon as the Bank of Canada makes their announcement. As I mentioned, fixed rates tend to price themselves in ahead of the Bank of Canada rate announcement in anticipation of where they are at. And looking at it today, we do see that as of this morning at 9:45, as soon as the rate announcement came out this morning, we did see a rate, the 5-year bond yield did start to fall again. It did spike this morning, but it did start to fall as soon as we saw that rate announcement. Not a big fall, but a small fall. And that indicates to me that probably we saw these fixed rates that are already out there on the market priced in by the market weeks ago. I saw fixed rates, as low as in the 3% range just a few weeks ago. That was crazy. But right now, I'm mentioning prime rate at 5.95%. If you're just joining me here right now, we saw the Bank of Canada reduce their interest rate by 50 basis points. My name is Joe Bladdock. I'm a mortgage broker working in Ontario, Canada, helping anyone in Ontario, Canada buy or refinance a home. If we're looking at where rates are headed today, variable rate mortgages, we're going to see their rates go down by 0.5% as a result of this Bank of Canada interest rate announcement. And as for fixed rates, we'll probably see more heated competition in the weeks to come because of the additional rate cut that we saw today. The market will continue to fuel another, what do they call it? They're trying to predict or price in the next rate announcement. And the next rate announcement is coming up. It's this year. It's in Canada, coming up on December. Let's see here. I'm trying to remember here. Is it December the 6th or December the 5th? Let's see here. December the 4th, actually. So I was wrong. I know last year was December 6th. This year it's December the 4th. So we're seeing a December the 4th date as the next Bank of Canada interest rate announcement date. I would probably continue to see rate cuts into December. I'm going to say that my analysis would say that with this jumbo rate cut today, we're now on par with, we understand inflation is going down. We understand oil prices are heading down. I'm anticipating oil to probably go down in the winter as the demand for fuel kind of drops off. People are driving less. and that will push inflation down and that will push rates down. I'm kind of seeing that we're in a rate decreasing environment at this time. We'll see another rate cut in December, but it's hard to say if it'll be a double rate cut. It'll probably be a 25 basis point rate cut. If we take a look at what the US has been doing, the US did see a rate reduction on their last policy rate meeting. Their inflation rate has gone down to 2.4%, not under 2%. So they're in a different situation than we are in Canada. It'll be interesting to see how Canadians react to this, because typically November, December, it's typically a slow time for real estate. So be interesting to see how real estate responds to these rate cuts. Will we see really not that much activity until the spring? And if we see a further rate cut in December of 25 basis points, that would be a total of 1.5% reduction in rates. So that's pretty fantastic. And to see that into next year will really fuel a spring housing market for Canada. So if you're looking to move, you'll probably be able to move a lot easier and sell your home a lot quicker when rates are a lot lower versus a lot higher. So, okay, I have someone telling me it's the GDP here on one of my channels here. I'm going to go into the GDP here. Canadian GDP, we'll just take a look at that. And let's see what the numbers are telling us here. All right. Canada GDP, let's see the trends. All right. We have GDP at, well, this is the dollar value. Let's see, stats, forecast. The forecast for GDP looks promising, increasing in 2024, increasing 25, 23, 26, sorry. But the thing is, that's based on that forward guidance. They're looking at that 3% growth. And our GDP has not been that historically. It's been quite a lot flatter over the last few years. But let's take a look here. I think we'll continue to monitor the GDP. A lot of the times that Canada does see the GDP falling with the oil prices right now and house transactions being a lot lower. We'll probably see the GDP a lot lower for this year because we've seen a lot lower transactions this year than say the transactions in COVID. And with oil prices falling, we'll probably have to see the Canadian Bank of Canada lower interest rates even further. All right, let's see what else we can look at here in terms of metrics. But if you're just joining me here today, the Bank of Canada did decrease rates by 0.50%, and we're almost done our episode today for Canadian Mortgage Weekly. All right. This is episode 182, by the way, guys. Really excited that you are joining me on all these episodes here. Looks like unemployment rate is currently at 6.5%. So if we're looking at the unemployment rate, it has actually steadily gone up over these last few years as well. So oil going down, unemployment going up, inflation going down, all indications of upcoming lower rate environment. Let's take a look at one more metric here, and that is the CDOR, Canadian 3-month interbank rate. Okay, so it looks like for the last little while, looks like it's been reducing over since November, with a sharp drop in June, and then a slight uptick in the last few weeks here. But yeah, we're looking at a lot lower than before. CDOR rates starting to fall now. And as we were chatting with some of our commenters today, when interest rates in Canada tend to fall, they tend to fall quickly. And sharply, just as fast, if not faster, than how they've gone up. And looking at some of the charts here of when interest rates have gone up versus when they've gone down, I'm not able to show it to my TikTok and Instagram friends right now the way I would like to. But if we look at the charts, the interest rates actually went down quicker than they went up. So that is a very interesting phenomenon. So if you're just joining me here today, we are almost at the end of our Canadian Mortgage Weekly episode. The rates did go down 0.5% today in Canada, a 50 basis point reduction. That is going to mean that interest rates in Canada are going to continue to go down. Anyone who has a variable rate mortgage today will see their payments or the length of time they have to pay the mortgage off, which is the amortization, go down. They'll receive a letter in the mail about this in the next 1 to 2 months. Lines of credit as well will be affected. The interest rate payment on those lines of credit will go down, whether it's a secure line of credit or an unsecured line of credit. A lot of those are based off a variable interest rate, and that will change today. And we'll also see a lot of other products change, such as variable rate car loans and variable rate credit cards. We'll see lower interest rate charges on them. We are in a lowering rate environment, a reducing rate environment, or a downward rate environment here in Canada right now. We're seeing all indicators pointing towards rates going down in the future. And with that, with today's rate announcement of 50 basis points, we probably will see another rate reduction of 25 minimum basis points in December on the 4th. So looking forward to discussing that with you all on December the 4th. In the meantime, if you are interested in seeing more episodes of Canadian Mortgage Weekly, would love to see you follow my channel. And if you have any suggestions for content, feel free to put in the chat what topics you'd like me to discuss. And I really appreciate all my viewers' encouragement here that are watching and tuning in on a regular basis. It means a lot to me, and I appreciate it very much. Thanks for watching, everyone. I hope you have a great day. And if you're joining me here, 50 basis point reduction here in Canada, huge news, and really looking forward to seeing what December 4th has in store for us. If you want to book an appointment with me, you can always do that. Book a call back in the video description link below. You can click that link. It will take you to my booking page, and we can have a discussion about your mortgage on your timeline when it fits best for you to take a look at your mortgage, your options. If you're buying, selling, or refinancing, we can take a look at what's best for you that way. I work with all the banks, TD Bank, Scotiabank, as well as some alternative lenders. If you're self-employed, we can take a look at what specific solutions will work well for you. So enjoy this 50 basis point rate cut, everyone in Canada. Thanks for watching. Appreciate all your viewers, and follow my channel or my TikTok or my Twitter